What you don't know can hurt you with credit cards. It's so easy to skip over that giant packet of information you're served when you apply for a credit card. However, the information in that packet can affect your ability to qualify for a mortgage in the future, personal loans, credit cards, or even the apartment you want to rent in the future. So I guarantee you, if you watch until the end of the video, at the very least, you'll at least know the biggest mistakes people make with credit cards and how to avoid them. Please go ahead and subscribe to my channel. I'm looking to get to 100,000 subscribers by 12/31 of 2024. If I can reach that goal, I'm going to donate all the month of December's proceeds from YouTube to the American Cancer Society. So make sure you go ahead and like, subscribe, share with your friends, do whatever you need to do so that way we can hit that 100,000 subscriber goal by the end of the year. I'll be posting every Tuesday and Friday, so make sure you check back for more videos. So to start off, what is a credit card? According to Bankrate, a credit card is a loan known as revolving credit. This loan is issued by a bank and is subject to a credit limit that can be used for everyday expenses or large purchases. Like traditional loans, balances on credit cards are typically subject to interest or an APR, which is added to your bill if the balance is not paid in full each month. And yes, you can get charged interest even if you make the minimum payment each month. APR stands for annual percentage rate. This is the interest you pay on your credit card when you have a statement balance at the end of each month. So if you don't pay it off in full, you pay the APR on whatever the statement balance is. Now, if you also don't pay off that balance and say you just make the minimum payment, the interest on your statement balance is compounded daily. So you're basically paying interest on your interest. Now that can be a little confusing. So for example, to break it down further, if you have a statement balance of $4,500 and have an APR of 27.84%, which according to Forbes is the average APR for a credit card, you would have an additional $104.12 tacked onto your statement balance at the end of the month. And mind you, that compounds. So if you don't pay any, or if you don't accumulate any more charges on the card and you don't pay off that statement balance, the next month you're going to be paying that 27.84% on your new balance of $2,604.12. So that $2,604 is the original $4,500 plus the $104.12 in interest. And then furthermore, applying the same circumstances to the following month, your balance would then grow to $4,710.65. This is all because you didn't pay off that initial balance of $4,500. It's just interest on interest on interest, just compounds and compounds. So once the statement balance is paid off in full, you will no longer be charged interest. However, as you can see, this can get costly super fast. Now that I've scared you off with the dangers of a credit card, why would you use one instead of a debit card or even cash? One of the biggest ways credit cards are useful is for the points that you accumulate when you utilize the credit card for certain purchases. In addition to this, there's also a welcome bonus for if you spend a certain amount of money by a certain date, you'll get this big welcome bonus. Some credit cards will be if you spend $3,000 in the 3 months that you of having the credit card, we'll give you a welcome bonus of 60,000 points. A more specific example of this would be the Marriott Bonvoy card, who has that exact those exact terms that I just referenced. If you spend $3,000 within 3 months, you'd get a welcome offer of 3 free nights at the Marriott Hotel. Furthermore, the additional points, if you spend in the categories of, and I'm going to read this off so I don't mess it up, 17 times the total points per dollar spent at Marriott, 6 points for every $1 spent at participating Marriott properties, plus 10x points for being a member and 1x points for having automatic Marriott Silver Elite status. 3x for a dollar spent on combined gas station, grocery stores, and dining purchases. 2x your points for $1 spent on all other eligible purchases. And you can use those points for travel for free, basically. If they accumulate over time, then you can utilize those points to pay for a flight or pay for a hotel or pay for a rental car, whatever it may be, depending on the credit card that you have. Now, that Marriott Bonvoy welcome offer that I just referenced is an actual real thing. So if that's something you're interested in, I'll leave a referral link in my description, so that way you can get the card for yourself if you want. So now we've gone over the dangers of credit cards. We've gone over why credit cards are useful. Now it's time to go over something a little more in depth, which is how is your credit score calculated? There's a variety of different categories that are utilized when determining what your credit score is. Now, these are all weighed differently depending on the credit bureau that's pulling your credit. But the or the multiple categories are your payment history. So this would be making your payment statement balance on time, consistently over a certain amount of time. Other factors would be included in this would be previous bankruptcies, collections, delinquencies, anything like that. And the more payment issues you have on your payment history, the lower credit score you will have. This is amount owed. So this goes into your credit utilization. This is better explained with an example. So if your limit on your credit card was $10,000, you should aim to keep the amount that you have spent on a given time below 30%. So this would be at most spending on the credit card before paying it off $3,000. You ideally like to keep it below that and then pay it off, and then you can rack it up again. The next is length of credit history. So banks like to see that you can consistently make your payments on time over an extended period of time. So the longer history that you have, the better off you'll be, because the banks, like I said, will feel more comfortable going into business with you, knowing that you can make your payments on time, and you've had the proof and record to back it up. Next is new credit. Banks don't like to see that you've applied for multiple credit cards or loans at a given period of time. Generally, if someone's applying for many credit cards or loans at a given time, it can indicate financial difficulty. So this will ultimately negatively impact your credit score if you're making multiple applications for credit cards or loans at a given time. The fifth one and the final one is a credit mix. Banks like to see that you can consistently maintain your payments over a variety of different loan or lending products. So some examples of this would be a mortgage or car loan, a credit card, a personal loan. These are all different lending products or loan products, and a bank likes to see that you can have all these, consistently make the payments on each, and in turn, this will increase your credit score. Now, within the US, there are three different credit reporting bureaus that track your credit score. So, those three bureaus are Experian, TransUnion, as well as Equifax. The tricky part in determining your credit score is each one of these bureaus utilizes those five categories that I just referenced, but they weigh each one of those categories differently. So you might get your credit pulled. You'll see these three different scores, and one will be higher than the other. And it's just because they'll weigh the different categories differently. Now, the standard percentages for each one of these categories is 35% for payment history, it's weighed, 30% for amount owed, 15% for length of credit history, 10% for new credit, and 10% for credit mix. Depending on, once again, the credit bureau, those could be different, and in turn, you get a different credit score. All in all, the best lending terms are provided to those who have a credit score over 750. So now we've gone over what a credit card is, how to determine your credit score, when you'll be charged interest, the advantages of a credit card. Now it's time to go over when and how to use a credit card. Ideally, you use this credit card as a debit card. So you only spend the money when the money's there to be spent. It can be extremely useful, however, if you have standard bills each month for $1,000 a month, say. You use this credit card for them, and then you can take advantage of that intro offer to ultimately travel for free. So that brings me to the next point where you can utilize these credit cards to do what's called travel hacking. Long story short, travel hacking is basically getting the intro points after doing whatever you needed to do to get them. And then you use those points to book a vacation for free. Furthermore, you can also use a specific credit card for spending in only the categories that generate the most points. So, as previously mentioned, say a credit card gave you a ton of points for groceries, dining, as well as gas. You just utilize your credit card for those categories to generate the absolute most amount of points for dining, groceries, and gas. Now, on the travel hacking example, you then utilize those points to go ahead and book a stay at the St. Regis in Hawaii, for example. I actually don't know if there's a St. Regis in Hawaii, but you get the point. Final way you can use a credit card is for a budgeting tool. At the end of the month, it gives you a list of all your expenses and exactly what those expenses were. So, if you're looking to limit your spending to a specific category, then you can utilize this statement as a budgeting tool. Now, also, if you own a business, you can use this statement at the end of the year, or these multiple 12 statements at the end of the year, to write off in specific categories. So, say office supplies or gas or whatever it may be, you'll have the specific number broken down based on the credit card that you utilize that you can then go ahead and work with for your tax write-offs at the end of the year. Now, with all that being said and all this credit card talk, I felt it was only appropriate to give you some suggestions on credit cards that I personally utilize. And those are the Amex Platinum, Amex Gold, as well as the Marriott Bonvoy that I previously referenced. These are my three main. I have a few others, but these are the heavy hitters. They also have some great welcome bonuses that I personally took advantage of, and you can too. So I'll post those in the description as well for you. Thank you guys so much for watching. Please like and subscribe. As you've probably seen in my other videos, I'm doing a little, if you want to call it a year challenge. If I get to 100,000 subscribers by 12/31/2024, I'll donate the whole month of December's proceeds from YouTube to the American Cancer Society. So please go ahead and like and subscribe, share it with your friends, so that way I can reach that new goal of 100,000 subscribers by 12/31 of 2024.